Sup traders, trades here. Let's review a trade that I took today on Eurodollar post CPI. Eurodollar has been on a bullish order flow for me on the monthly time frame. If you look at this, right, we took out these lows previously, came down and held this previous support, took liquidity below that, pushed up, took out liquidity again below this low, and again came into this previous support, and then boom, just continued higher with no sign of holding except for last month, where it's essentially an order block and price came down and took out that low. Previous month low was taken out, and after taking out that low on the lower time frames, you can see their price is showing its willingness to continue higher up. And to me, what's more interesting was how price closed 2 weeks ago with this low wick candle, bearish engulfing candle. However, right, we took out, price opened above this bullish engulfing candle and then closed down, anticipating a move lower. However, this low wick is suggestive to me that we've gathered the liquidity that we need and we want to continue higher up. So yeah, and the lower time frame even more clearer. We came down, displaced up, leaving fair value gaps along the way. One right there, and then another one this week, last week, and then price came into that yesterday on Monday, grabbed the 50% off that low, and then today we came down and tested that 50% one more time and pushed up. I am anticipating price to come out and take out this high. However, I've already taken the targets. So let's see what happened. So CPI came out. We took out this low yesterday. Price closed below, which could suggest price was going to continue lower. However, given the order flow is so strongly bullish, as you can see, we came into this daily time frame fair value gap. We also have this fair value gap on the 240, which just happens to be below this swing low, which provides an area for liquidity for price to grab before shooting higher up. So yeah, we came down yesterday, ranged here before CPI. There's no way I was going to trade any of that. And then during the CPI candle, so this is the 10 a.m. candle for UK time, this will be the 5 a.m. US time, we put in this strong bullish engulfing liquidity candle where we grabbed the liquidity below previous candle and closed up with a strong bullish momentum on the 1 hour time frame. You can see we accumulated, came down, took out this liquidity. Just this candle, this 1 o'clock candle UK time with this bullish engulfing candle, to me was a strong indication that we are going to continue higher up. And to me, it's less about the direction of the trade this time and more about my strategy to enter a trade, and how I am going to manage my trade is a lot more important to me right now than in entering any trades. Regardless of me being fully confident in my analysis, I still did 3 things that I told myself that I'll definitely do going forward, because these 3 things have let me down. Not doing these 3 things have let me down enough times where I've blown multiple funded or almost funded accounts and have had to restart over and over again. So it's a mistake that I refuse to make this time around. And one of those things is not entering too early. So I always seem to enter early. I waited for price to come down to at least the 50% of the range. Right there on the 15-minute is what I was watching. And as price tested that New York open, I entered around that area. So to me, that was good. Again, could have entered a 618. That would have been a better entry, right? Would have given me a much better risk reward, almost a 2-to-1. But I entered around here, which I'm okay with. That's improved already, because before I would have want to enter somewhere around here after seeing this candle, and enter somewhere around here and then be in a negative risk reward. That was one thing that I did well and I was happy with. Another one was whenever I'm overconfident with my analysis, I risk quite a high amount. So with this, I would have normally risked, I don't even know anything that comes to my mind at the time. It would be very high risk. But this time, no, I minimized my risk. It was around 0.5 or 0.6 or 7% risk that I risked on this trade. So to me, just knowing that I haven't risked 5% on a trade gave me a lot of comfort in holding the trade, because if I had risked really high percentage, I would have immediately taken targets as price approached these highs. But I was patient, because to me, I'm confident that it's going to go up to that level. Although I've taken it out slightly early at the time, it's still better than what I would have done previously. And another mistake I always make is not having a stop loss. I always, especially when I'm very confident with my trade, I never put a stop loss anywhere below a low. It's always just, I'll see how it goes, and if it goes against me with a 5% risk, I will essentially blow my account usually, or I'll just cut my losses short and then exit very quickly. However, risking low, having a stop loss, which I'll put it below this low, so I was okay if price came down there to cut my low, then I would have looked to enter somewhere around here. That's another one, and I was very happy that I let my the things that I promised myself that I'll do, I did. And on top, I promised myself I'll only take 2 trades per week. So this is my first trade of the week. Although there was an opportunity on Monday, I believe not this, on pound dollar, I didn't take it because it was Monday, CPI tomorrow. Very good trade. I wish I did take it. So that's something I'll have to learn. But limiting my trades to 2 trades a week, regardless of the outcome, and also following those other 3 criterias, has really helped me stay in this trade and allow it to run to targets. This same idea could provide another opportunity tomorrow where price can come down and take out a swing low and then push up. So I'll see how I will look into that tomorrow, and I'll continue to use those 3 principles of, you know, low risk, not entering early, entering on a pullback, and having a stop loss. Those 3 principles are essential right now for me to even be comfortable holding a trade and not go fucking crazy. This is how yesterday's candle closed, and going into today, which is Wednesday, I was bullish, and I entered a trade after seeing price pull back below an order block on the 4-hour time frame. A potential order block. It might not be an order block yet, but to me is an entry. So you saw my trade earlier. I exited the trade somewhere around here, entered somewhere around here. Price did move up quite a bit into this fair value gap on the daily time frame as well, I believe. Right, there's quite a strong bearish fair value gap, which we're closing above at the moment, and this is quite in discount, but at the moment I see price continuing higher. It could potentially come down. I don't think it will, but yeah, that's another plan. If it comes down there, then look to enter again. However, I don't expect price to come down to that low. Price displaced up quite strongly. We had, you know, this potential accumulation. People could have seen that as an accumulation before taking out this high and then gone short, which is something I used to do. But the way it moved up, this sharp move up within such a bullish order flow, is not a good place to look for a trade to go short. So I was waiting patiently. I was waiting for price to give me a bearish candle with a fair value gap below, and price came down into that fair value gap and started to displace up on the 15-minute time frame. This was a trade I took yesterday. Could have held it for longer, could have held it until these highs were taken out, could have gotten a higher risk, but it's what it is. Sometimes I'm getting back into trading, and I'm okay taking small wins rather than aiming for highs, which brings me to my trade today. I've got an entry principle, 3 entry principles now going forward. One is enter at a pullback in a trend trade. Always enter at a pullback because it gives me a better risk reward, which means it gives me more room to place my stops, because if I'm entering on a deeper pullback, that means I can put my stops lower than where I would expect to put my stop. And yeah, enter on a pullback, enter with low risk, no more than 1%. At the moment, I'm not even doing 1%, it's around 0.5%. And of course, have a stop loss, because I used to trade and think I knew what price was going to do. Like today, you know, the way price pull came into this first fair value gap on the 60-minute, I was certain it was going to find support, especially because we had this accumulation of this bullish pin bar that failed to hold, followed by this bearish engulfing liquidity candle, and that is usually a sign that price is going to drop down into a high time frame or in a point of interest like this fair value gap and push up. And I was looking to trade at the start of this fair value gap, rather than that have my stops below here, because that area price shouldn't come down to that low anymore. Now it can definitely come down to this low and then take me out and then push up. This would have been a better trade, but because it didn't come down to that low, I couldn't enter. And then I saw this displacement up clear on the 15-minute time frame. Price pushed up, took out this high, which is a negative confluence to be noted, and then it pulled back. This is what happened again. I didn't enter. Like I said, I failed one of my 3 entry principles, which is to enter on a pullback. Had I entered on the 618 or even between 618 and 50, could have put my stops below these lows and targets here. I still ended up with a 1-to-1, but because I entered after seeing this low right here being taken out, and as price took that low out, I entered somewhere around here, and then I have my stops down here, and then targets are going to be at these highs. So technically speaking, it's a 1-to-1, less than 1-to-1. Yeah, it's less than 1-to-1. It's around 0.89, so 0.9. I'm expecting price now to come down and take out this low and then find support and push up, honestly. But another one of my rule at the moment is not to take more than 2 trades a week. I took a trade yesterday and I took a trade today, and I need to see these trades through, because I can't skip a process in trading. I can't exit a trade because I think it's going to go against me. I need to see it through. I need to feel the pain of that loss and accept it and learn it, rather than, I will exit in it early, and then, because that's a pattern that repeats over and over again in the future. So if I need to see this one through, see what happens. Maybe we'll come down, take out this low. I won't be able to enter no matter what happens if my stops gets taken out. Ideally, I reckon it's going to come down to this fair value gap, potentially tap into this order block, that 240 order block there as well. Somewhere around here, it's going to find support and push up. That is what it's going to do, and I'm not going to be able to enter because of the fact that I have a rule that I need to stick by, and I have to stick by it at the moment. So let's see how this plays out. Bro, I thought me not being able to trade another trade this week was going to let me down, and I was going to miss out on a really good opportunity. But I'm glad I had that rule, because it saved me from taking another loss, because I would have been way overconfident on this analysis and would have traded long as price came into the 50% of this fair value gap right there below this low, and I probably would have had my stops somewhere around here. Might have been stopped out by this point, and I would have aimed for these highs. However, this has happened before. 23rd or 24th of May, Wednesday, it was a Thursday, similar pattern, bullish order flow, prices moving up, it comes into a first fair value gap on 240 time frame. I don't think there was an order block at that time. I enter as soon as it comes there, high risk, and then re-enter as it goes down, high risk, and then re-enter as it starts to move up, again high risk. Lost a lot of percentage at that time, blew my account that week. And because one of the reasons I have the rule now at the moment is I won't enter more than one trade on a trade idea, which was yesterday. I entered one trade yesterday on that idea, wasn't going to enter anymore. One trade entered last week on Tuesday, that was on one idea, just one trade. And I have a limit of just 2 trades a week, no more than 2 trades, because I know myself, I can get quite impulsive and end up taking high risks and blow my account again. And right here is exactly what I would have done. This area right here, this below this low, I would have, and especially because that was after PPI, I would have gone long as price came into, I would have gone long here, and might have had my stops down there, and I would have aimed for these highs, and I would have been stopped out. That is a fact. I know that's a fact. I can't deny it. I would have been stopped out because I would have seen this low wick candle on the 5 minutes and think, okay, now, and this inside bar candle, and would have 100% confidently believed now we're going to start to continue higher up. But this is good. I can actually analyze the trade or the day without being emotionally invested in any opportunities. So after price pulled deep into this discount of this range, right? We are quite deep into discount. That's, I think, something we have to admit. And even though the order flow is still bullish to me on the high time frame, we also closed above this fair value gap on the daily time frame yesterday. And to me, that was again another reason to think price is going to continue higher up. But of course, you have to consider the fact that we did come into this discount, deep into discount. We pushed up, although like I said yesterday, seeing price push up so sharply high up, this might not be considered accumulation, but we don't care about accumulation. We pushed up. It's the fact that we failed to continue higher up, especially on the 1 hour time frame, after taking out this high where I took my entry afterwards. We pushed lower, then pushed up, and failed to continue higher up. And then we pushed lower before the PPI news at 8 a.m, half 8 a.m. US time, half 1 UK time, and then came down. After price started to push lower, I was sure it was going to come down into this fair value gap. It's just the fact that I would have gone long as soon as it came into that fair value gap or after the PPI news. But now is when you would want to trade, because yes, PPI came, price failed to hold. We're coming down. We've come into this inverse fair value gap on the 240 time frame. We're holding that level. On the 1 hour time frame, we had this accumulation, which is exactly what I want to see. We had this hold on the lower time frames. We've got some market structure shifts going on. We've got low being taken out, and now I expect price to find some kind of a support. And this is exactly what happened last time. We pulled lower, I entered early, but then we started to see more and more of these indecision candles. There was this candle on the 1 hour time frame, then price took out low off that candle, and then from there price went up. I'm not sure if it will go up like I'm suggesting it will, but if there is accumulation happening at the top, like this one right here, which is what happened previously on the other trade, there's accumulation going on right there, and price is pushing lower, closing below a low. We want to wait for price to give some kind of an accumulation on the 1 hour time frame rather than the 15-minute time frame, which doesn't really provide that kind of a confidence, you want this 1 hour accumulation and then wait for that low to be taken out after, and then enter anywhere around there. That will be a much better trade. So after that low was taken, enter around there, put stops below. Ideally, it might come and tap into this daily time frame fair value gap, and then put your start targets up there, or even into this fair value gap somewhere where you get 1-to-1. So yeah, I'm grateful for the fucking rules that I placed on myself this week, and I actually saw it through as well, which makes me even happier. So continue to follow the rules, follow those strict rules, and keep myself out of trouble. Alright, Friday's over, and this is how price action played out. What did I say? Could potentially hold that level, and target is pushing up now. Next week, going into Monday, I have an area that I can target, which is up here, so we'll get a good opportunity next week. But yeah, the trade here played out at this low around 1.163, and then it's just pushed up just like I anticipated. But it's fine, I wasn't in that trade because I know if I had traded that, I would have broken a rule that I set on myself. And right now, for me, being disciplined and following my rules is more important than taking any trades. It's the habit that I set myself now that's going to pay off significantly more in the future. So there is no way I was going to trade any of this, even though I've seen this scenario already once in the past and blew my account trading up here, which is exactly what I would have done had I not set myself the rule of not trading more than 2 trades this week. And then, I would have been so emotionally invested, I would have gone crazy. Then it would have moved down, and I would have wanted to enter. I would have taken a loss, and then I wouldn't have entered, and then I would have regretted not entering even more, and then price move up. So it would have been chaotic. So I'm glad I stayed out. But this is good. This is exactly what happened before, and this is a great lesson for me to understand that whenever the market is bullish, I'm waiting for price to pull deep, and especially when we have accumulation at the top, it's gonna go slightly deeper into the discount than trading up here on the 4-hour time frame, which is what I wanted to do in the first place. So I wanted to trade up here after the price came below this order block. Had I just entered on the pullback, I would think I would have been around here after price tapped into that fair value gap. I would have been a lot more, it would have been a much better trade, but I wanted to see some displacement before, and then seeing the displacement, I should have noticed price taking this high out and then coming down, and that should have been a sign for me to not enter. But that's a good lesson to take on. And this was the trade that I took before, where I blew my account in a bullish order flow. So this is what happened. We had a strong bullish order flow. I was bullish going into this day. We had this fair value gap on the 240, and then we had this second fair value gap. So I saw this accumulation, and then as price came below this low, right, I was sure it was going to hold this fair value gap, which is where I went long, I believe. And then it came down somewhere around here, went long again, and then boom, it came below this fair value gap into this order block. On the 1-hour time frame, I'll show you exactly what I mean by that, what happened there. You see what I mean? We had the first pullback, like the one we had in this week's trade. Then price came into this fair value gap. Then we had another order block, which is exactly what we had this week. And then price took out the low of that order block, and then found support and then pushed up. So again, waited for this second order block, not this first one, the second one, and then after price takes out that low, go long. I think that is a much better trade, because as you can see, we took out this liquidity here and then failed to go below this, which is what happened on the 240 this week before displacing up. So price really shouldn't come below this low. And for here, I'm not going to do this, but like you can see, it's a similar idea to what happened this week. It's not always going to be a carbon copy, but you do have to try to find commonalities between setups, and this one to me is identical to what happened this week. And this happened in May, so June, July, August, every 3 months. A trade like this can set you up 2-3%. And this is what I mean by the 240. We grab liquidity here, it's clear on the 240, grab liquidity here, and then boom, displaced up. So it shouldn't really be coming below that liquidity level anytime soon. But there was also a trade today. If anyone, if I was going to trade, it would have been right here. This would have been a draw on my draw on liquidity. Price displaced up. So this is 5 a.m. US time, so around 10 a.m. And right here, we had this order block and this fair value gap. So to me, I would have wanted to enter around that low, and as price took out the high. So we've created multiple lows here. Right, we had this low, and then we had this low being created, and that would have been a good place to enter. Stops below this low. But again, right, could have been something like, this is an accumulation. If I'm seeing accumulation at the height, we're going to get a deeper pullback. So don't trade when it's like that. Wait for the deeper pullback. So maybe it's a lesson not to take that trade there. However, because it's so close to that drawn liquidity on that 1-hour time frame, And the way it's reacted here, we made a low, then this low, and then grab liquidity, to me is an indication that we are going to come up and take out the high. And then I would have just taken my targets off there. I wouldn't have gone higher. But yeah, that's a trade opportunity. Yeah, I'm not sure why it would not pull back deeper on this one. Maybe because we've already had this deep pullback on the 60-minute time frame, and because price is now, gradually and sharply starts to move up, leaving displacements along the way, or leaving fair value gaps along the way, is suggestive that it's not going to pull back. We also closed above this inverse fair value gap. I don't want to look at too many fair value gaps, at the same time. So we've got two order blocks, price drops below them, and boom. So yeah, maybe that's a reason to look for a trade. But ultimately, my main idea was this down here, below this order block, I think would have been a perfect trade, and stops below this fair value gap. Yeah, targets, this high would have been my target. I wouldn't have gone for the very high. So good week, and I think there's opportunities for another trade on Monday. So let's see how that goes.